With a view to reduce the tax burden, persons have huge taxable income may shift a portion of their income to persons who do not have taxable income. Hence, the income derived by such other person may be clubbed with the transferor's income and be taxed so as to protect the interest of the revenue. And similarly, we have the Benami law as well to cover the same. So, as far as transfer is concerned, this transfer is covered under what? Section number 63 defines what is a transfer, we will see. And the transfer can be two types. One is what? Transfer of income without transfer of assets, or could be what? Transfer of asset. Could be transfer of asset. Transfer of asset. So, transfer of asset also could be to spouse, could be due to son's wife, or it could be what? Other cases. Right? Other cases. So, if it is, you know, any assets which are transferred to spouse, and of course, guys, transfer here. Let's see section 63 just to understand. Whatever section I want, that only will not come. Everything else will come. Yes. Gives the transfer a right to shall be deemed to be revocable, and then transfer includes any settlement, trust, covenant, agreement, or arrangement. See, settlement can be a marriage settlement. Now, if the marriage settlement happens, will this clubbing come? We'll see. Trust, I will create a trust, a group of people, and I will transfer the assets there. That will look after some beneficiaries. Beneficiaries can be children, spouse. Covenant. Covenant is a restriction or a benefit. For example, that's what, no? The grandfather will transfer the asset to me. Is it a benefit or a restriction? Benefit. But what is the restriction? Restriction is I need to transfer 50,000 rupees to somebody else. Covenant. Yes. Agreement or arrangement. Arrangement is something which has an oral agreement. Agreement here generally means written, but arrangement is what? It is an understanding. Need not be in writing. That is called arrangement. Just for your knowledge, these are all based on decided case laws. So obviously, rather than me going to each and every case law, I'm trying to tell you, in the limited time that we have, 160, 170 hours, good enough for you to understand what all questions may come in the examination. Then, of course, revocable, we will see that revocable concept. Revocable means what? It contains any provision for retransfer of the asset back to you. Revocable. Or in any way gives the transfer right to reassume power directly or indirectly. So I can take back the power. That is called revocable transfer. That is the definition of transfer and revocable transfer. It is given here. So as far as spouse is concerned, it is 6414. Son's wife. Again, 1 second. For a spouse also. Adequate consideration. Inadequate consideration. Son's wife also. Adequate, inadequate. So for adequate consideration, clubbing will not apply. If I give it on for the particular amount, whatever it is market value, why will it apply? It will not apply, obviously. Inadequate consideration, if I am selling a house, other than house. For son's wife again, if for inadequate consideration transferring a house other than house. Other than house. One is house. One more is what, guys? Other than the house. One is house, other than house. Sorry. Kulcha sim sim. So guys, if it is house, no, for inadequate consideration, there is a concept called deem owner under section 27. If it's other than house, we have section 6414. But for son's wife, section 27 will not come. 6416. Why? An individual who transfer otherwise than for adequate consideration means what? For inadequate consideration, any house property to his or her spouse. If you see the, what do you say? Son's wife is not covered here under section 27. We'll come to that later. So this is the overall structure. You should understand the overall structure. Right? Other cases. In other cases, I need to see whether it is revocable transfer. Again defined in, the revocable transfer is covered in section 61. Definition of revocable given in section 63. Irrevocable. Section 62. Exception to section 61. Income, transfer of income without transfer of assets. This is given under section number 60. So this, my dear buddies, is the entire scheme of things with respect to transfer. Similarly, now clubbing is also covered for minor children. Minor children is covered under 64(1)(a). We'll see that in a while. 64(1)(a) is for minor children. Are you with me? Yes, this is the entire scheme of things. The full structure should be in your mind. So when you say, okay, spouse, if it's inadequate consideration, for house, it is section 27 deemed owner concept, whereas other than house, this will come. All that logic we will see in a while. Now let's come to section one by one. Section 60. Divide and rule policy. Section 60. Come on. Chapter 5, income of other person including in assets of total assets, assessee's total income. Transfer of income where there is no transfer of assets. All income arising to any person by virtue of a transfer. We understood what is transfer. Whether revocable or irrevocable, I don't care. Whether affected before or after commencement, whether there is no transfer of assets, but where only income is transferred, will chargeable to the income tax as the income of the transferor and shall be included in his total income. So you see here, Mr. A is carrying on business, declares that the profit derived from such business shall belong to his brother. He will declare. Mr. B without transferring the entire business. So Mr. A says, the whatever profits now, whatever it goes to my son. For example, I have a property. I will say the rent should go to my son. Actually, it happened. We were living in one of the rented premises when I was doing BCom, I remember. So that person, he was a ex-banker, retired guy, and he gave it to his son. Basically, it said, now the land, the owner, I am only the owner, but the rent is now to be given to son because son was not doing too well. Unfortunately, son passed away also recently. He was like, he's not old, but then of course he had some heart attack or something and he passed away. Nice guy. Sad. So if you see, yes, so the landlord has transferred his money, his source to the son. So that will be clubbed with the landlord or landlord's son only. It will be clubbed with the landlord. So will be clubbed in the income of Mr. A. What about this? MS Subbulakshmi, do you know? Correct. Singer. In lieu of amazing singer. Morning, morning in our South Indian homes. You know, your Suprabhatam will come. That is by the great MS Subbulakshmi. Suprabhatam. Yes. In view of the remuneration for acting in a movie, the producer granted the right to exploit the movie for a limited period in a defined territory. It was held that this was a transfer of asset and not income. Thus, clubbing under section 60 will not apply. So, instead of remuneration, they gave like a share of profit or exploitation. So, in this particular case, it was not clubbing at all, is what this particular court held way back. Clubbing of income in case of revocable transfer of asset. Revocable transfer. When there is a revocable transfer of any asset by a person to another person, any income arising from such asset shall be included in the total income of the transferor and taxed accordingly. Revocable transfer means an asset where the right to take back the asset is there. Example, you see, Mr. X transfers an asset to his friend. Why spouse not covered? For spouse, there is a specific section. For spouse, we have a specific section. So the specific section will override the general section, right? Right. So that is what section 60 says. 61 we are seeing. Mr. X transfers an asset to a friend, Mr. Y, with the condition that Mr. Y needs to return the asset after 10 years. In this case, transfer is called revocable. Though the income from the asset is received by Mr. Y, it is always taxed in the hands of Mr. X by virtue of section 61. But the exception is what, guys? Reverse. Exception is this. When the transfer is not revocable, means what? I will give the asset to you in an irrevocable transfer, which it cannot be cancelled. What is irrevocable transfer? Just let's check 61. All the income arising to any person by virtue of a revocable, 62. We'll see 62. Provisions of section 61 shall not apply, means what? Exception to section 61 is section 62. 61 is revocable, 62 is irrevocable. To any income arising to any person by virtue of transfer by way of trust, which is not revocable during the lifetime of the beneficiary, and in any case of any transfer, which is not revocable during the lifetime of the transferee. Before you leave that. Transferor derives no direct or indirect benefit from such income in either case. So, if onion creates a trust, correct? He has an irrevocable transfer, means what? He will transfer the entire, what do you say, house property or whatever it is. So if you see one more, I'll explain both with an example. All income arising to any person by virtue of any such transfer shall be chargeable as income tax of the transferor as and when the power to revoke the transfer arises, and shall then be included in his total income, and shall then be included in his total income. He will transfer his house property to a trust, and this will be irrevocable transfer. So in this trust, the beneficiaries will be all girls whose names are Nandini. Don't ask the logic and all. It's just a stupid example just to make you understand. Everyone who's named Nandini, some 20 girls will be there. He's looking after the education. Anyan has become very nice now. That is a trust. The house property, etc. has been transferred irrevocably. Correct? So obviously in this particular case, will the income be clubbed at the hands of Anyan? No. Because it very clearly says there, by way of trust, which is not revocable during the lifetime of the beneficiary. As and when those 20 girls till they are alive, nothing will be taxed in Anyan's hand. The transferor derives no direct or indirect benefit from such an income. Benefit here should be looked at what? Financial benefit. Sir, Anyan is getting satisfaction of helping Nandini's. No. Right? Similarly, Anyan transfers his house property in the name of his friend. Irrevocable transfer. Friend's name is Ambi. Transfers to his friend Ambi. Irrevocable transfer. And transfer is what? During the lifetime of Ambi. During the lifetime of Ambi. Let's say he transferred it on 1/1/2012. Correct? Let's say Ambi dies on 10th April 2022. And Anyan takes back the house on 31st December 2022. Some 7-8 months later, he will take it back. Now, all the income that was deriving from 1st January 2012 to the date of death, 10th April 2022, will be taxed at the hands of Ambi only, obviously. That is what section 62 says. It's an exception to revocable transfer, section 61. But after he dies, the income will be taxed in Anyan's hands only because he's taking it back. Question asked in the MCQ. See, all MCQ questions I'm merging. Question asked in the MCQ is, will it be taxed from 10th April 22 or 31st December 22? 10th April 22 or 31st December 22. From which date? Income of from where will it be taxed? If you say 31st December 22, what will be, where will the income go? Whether it's tax free or taxable from April to December, what will happen? So if you see, check it out. It shall be chargeable to income tax as the income of the transferor as and when the power to revoke the transfer arises. Power to revoke, power to withdraw, power to take back the transfer, it will arise from which day? Arise from the date of death, obviously. The day Ambi dies, that is the day you have the power to revoke the transfer. The day Ambi dies, that is the day you have the power to take back the transfer. The power to take back the transfer. That is why 10th April 2022. 10th April 2022. I hope you are getting the point. Got it? That's what it is. So same here. Transfer is not revocable. Yeah, the transfer must not derive any indirect benefit from such thing. Exception is there. Income arising to spouse, son's wife, minor and HF to be clubbed under section 64. Income of spouse is covered under 64(1). So check it out. In computing the total income, so 64(1) will check. This is done. This is done. We have understood this one also. Easy chapter, but hidden points are there in MCQ. That's why I am doing it very much in depth. In computing the total income, this is 64(1)(2) of the individual, there shall be included all income which arises directly or indirectly to the spouse of such individual by way of salary, commission, fees, or any other form of remuneration, whether in cash or kind, from a concern in which such individual has substantial interest. Provided that nothing in this clause shall apply to any income arising to the spouse where the spouse possesses technical or professional qualifications and the income is solely attributable to the application of his or her technical, professional knowledge or experience. And what do you mean by substantial interest? Substantial interest means in case where the concern is a company, shares carrying not less than 20% of the voting power, and in case of any other case, such person or one or more of his relatives are entitled in the aggregate at any time how much? 20% of the profits of the concern. 20% of the profits of the concern. And again, one or more of his relatives. And we have seen relatives means what, guys? Linear ascendant and descendant. So we'll take an example. Substantial interest. So I am reading this one now. Point number A. Okay, come to F2, point number A. Where the remuneration is solely attributable to the application of technical or professional qualification, knowledge and experience of the spouse. Such remuneration cannot be clubbed. So the person is giving one, wife controls, let's say 40% of an entity, and the entity is giving money to the husband. 1 lakh rupees per month. Husband is 4th standard fail. What do you think? Depending on the technical professional qualification is 4 lakh rupees, 5 lakh rupees per month for a 4th standard fail. Is it valid or invalid? Invalid. So will it be clubbed in the wife's hands? Yes. On the other hand, if that person 4th standard fail happened to be Vijay Salagaonkar, Shyam, correct, then deadly, then obviously is brilliant. So yes, if you have the knowledge, qualification, etc., of course you can pay money to that person, doesn't matter. So it depends on that. Now if both husband and wife both have substantial interests in the organization and both are in receipt of remuneration, before that let's just see here, substantial interest means this. Check example. Mr. Shah Rukh Khan and relative. Relative means what? Spouse, Gauri Khan, brother, sister, lineal ascendant, descendant. Has substantial interest in a company. Means what? What is substantial interest? Come here. In a company, more than 20% equity shares is held by whom? Shah Rukh Khan and the relatives. Then, if it's a firm or LLP, 20% of share in partnership. Employees. So, this is a case where Shah Rukh Khan employs whom? First, employs Mrs. Gauri Khan, wife of Mr. Shah Rukh Khan, an interior designer for a salary of 5 lakhs. Salary of 5 lakhs. She's anyway an interior designer and this is a company which is interior designing. Does she have adequate qualification? Yes. So if you see the arrow mark, salary income of 5 lakhs is not clubbed in the hands of Mr. Shah Rukh Khan. On the other hand, if Mrs. Gauri Khan, assume, was not qualified, then this 5 lakhs would be clubbed in the hands of Mr. Shah Rukh Khan. Now the question will arise, Shah Rukh Khan or his wife also substantial interest. So if both have substantial interest, what to do? That is point number 2. If both husband and wife have substantial interest in a concern and both are in receipt of remuneration from the concern and both do not possess any skill, both are chapper fellows, then such income will be included in the hands of that individual whose total income, excluding the income to be clubbed, is greater. So Shah Rukh Khan is earning, let's say 10 lakhs and this income is 2 lakhs and Gauri Khan is earning 5 lakhs and this income is 5 lakhs. Correct? Now in this case, both are what? Or this is let's say 6 lakhs from the interior designing company. Both do not possess any skill and both are in receipt of remuneration, both have substantial interest, then I should, if you think about it, here it is 12 or let's make it 9 or 8. Here it is 10, here it is 11. So should I club it in the hands of Gauri Khan? No, check it out. Both husband and wife have substantial interest and both are in receipt of remuneration and both husband and wife do not possess any skill. Such income will be clubbed in the hands of that individual whose total income, excluding the income to be clubbed, is greater. So Shah Rukh Khan's total income is 80 lakh, Gauri Khan is 5 lakh. Ignore 2 and 6. This 6 lakh will be clubbed in whose hands? Shah Rukh Khan's hands. So Shah Rukh Khan's income will be 8 plus 2 plus 5. Sorry, plus 6 is 6 only, no? 8 plus 2 plus 6. 8 plus 2 plus 6. And once it is clubbed in Shah Rukh Khan's hands, can it be shifted to Gauri Khan is the question. So once income is clubbed in the hands of either spouse, it shall continue to be clubbed in the hands of the same individual in any succeeding year unless the assessing officer is satisfied after giving to that spouse an opportunity to be heard that is necessary to do so. So if you see, if the AO feels that no, I should now shift the clubbing burden, etc., he can do so. But principles of natural justice have to be followed. Reasonable opportunity of being heard, PONJ, has to be followed. Husband means what? We have seen already. Second, where an asset is transferred to the spouse by the individual otherwise than for adequate consideration or in connection with an agreement to live apart, the income arising from such asset also will be 6414. 6414. So guys, this is what? Where asset is transferred to the spouse by an individual as a C. Otherwise than for adequate consideration. Otherwise than for adequate consideration. So if you see, for 6414, two things are not covered. One, agreement to live apart. And second, asset is transferred to the spouse by the individual SSC. Asset is transferred to the spouse by individual SSC, all other cases. So if you see, that wordings of the section subject to the provisions of 27.1. The spouse of such individual from assets transferred directly or indirectly to the spouse by such individual otherwise than for adequate consideration or in connection with an agreement to live apart. So if you see here in the chart, adequate consideration means clubbing will not come. And one more thing, spouse here. Agreement to live apart. Clubbing will not come. So husband or let's say wife gives husband a house as part of the agreement to live apart. Wife is earning really well. Husband is BCom husband, house husband. Correct? We'll tell housewife stupidly. No, he is house husband. So he will get one house because he's house husband. So what is that? That clubbing and all will not come because it's an agreement to live apart. Divorce proceedings. On the other hand, if there is adequate consideration, no problem. The husband has paid money, market value that too, properly paid through banking channels, no tension whatsoever, then what's the issue? So there is no beyond arm's length price and all that. It is within arm's length price, absolutely no problem. But it's inadequate. Now if it is a house, 6414 will not come. That's what they are trying to tell. Because it says subject to section 27. Section 27 is deemed owner. So if for example husband has property PQRS, right? So RS he will show in his books, PQ, correct? R and S he will claim as what do you say? Self-occupied. Wife will claim PQ as self-occupied. Husband is claiming RS as self-occupied. Wife is claiming PQ as self-occupied. Problem. So what happens for a husband's annual value will be nil. Wife also annual value will be nil. So even under clubbing, if I use 6414 and club the wife's income in husband's hands, husband income in wife hands, whatever it is, annual value will be nil because I am using it as residential property, self-occupied. Hence, this was happening, guys. That is why they inserted one clause called what? Subject to section 27. Because if you go to 27, what does it say? For the purposes of 22-26, an individual who transfers otherwise than for adequate consideration any house property to his or her spouse, not being a transfer in connection with an agreement to live apart, as discussed. If it's an agreement to live apart, no problem. But if it is not agreement to live apart, or to a minor child not being a married daughter, shall be deemed to be the owner of the house property so transferred. So guys, in this case, husband will be the owner of all PQRS. So for RS, it is self-occupied property. For PQ, it is deemed let out property. And of the four, they have to calculate whichever is higher, he has to pay. As per law, deemed let out. Why deemed let out property? Because you are a deemed owner under section 27. Because people were clubbing nil income in each other's hand, section 27 was inserted. And in 64.1.4, this amendment was made. So That is why this is the logic. When house is transferred, section 27 will apply, 6414 will not apply. When other items are transferred like gold, whatever, then 6414 will come into the picture. Got it? We change the battery. Yes. Now you know. Good. Okay. Notes to B above, which is B, this only, guys. Come down. Everything in a structured format I've given, nothing to worry. Concept of deemed owner, explained in section 27, I already did now. The marital relationship between husband and wife should exist both at the time of transfer of the asset and the time of accrual of income in order to attract clubbing provisions. So basically, if what they're trying to tell is, if I give my house to my fiance and later the rental income she is taking, will the clubbing provisions apply? No. Similarly, son's wife is also there. No. If the father-in-law or mother-in-law gives the asset to prospective daughter-in-law, will clubbing provisions apply? No. Check. Miss Alia received a gift of 10 lakh from her boyfriend, Mr. Ranbir. After they both got married, Mr. Ranbir gifted Mrs. Alia another 5 lakh. In this case, the first 10 lakh will be taxed in the hands of Miss Alia only, as there was no marital relationship. Before marriage, no marital relationship. After marriage, along with marital, change the wordings, martial relationship also. Karate. Right? Yes. Shh, don't tell anybody. Yeah. Then what? No marital relationship between Miss Alia and Mr. Ranbir. However, 5 lakh will be taxed in the hands of Mr. Ranbir, as Miss Alia and Mr. Ranbir were married, and this was transfer of asset without consideration to spouse. Sir, Alia will earn more than Ranbir. Don't connect it to the film actors. Just an example, guys. Income on the asset transferred is clubbed, but not income on the accretion to the asset. Accretion means addition. So I will gift gold to you. You will keep gold and then get some, let's say I will transfer some 10 lakhs to you. With that 10 lakhs, you will go buy debentures. Correct? Income on the asset is clubbed. Or let's take a simple example. That other part I'll come later. I'll transfer my house to you. You will get rental income. That rental income you will go and deposit in the bank. Bank will give you FD interest. Will that also be clubbed? No. Income on income is not clubbed. Mr. Mota, an individual transferred a flat to his wife, Mrs. Moti, okay, who derived rental income from the flat. Such rental income will be clubbed in Mr. Mota's hands. However, Mrs. Moti invested such rental income in fixed deposit and derived interest income from such fixed deposits. Such interest income cannot be clubbed in the hands of Mr. Mota. Hence, income on the asset is transferred is clubbed, but not the income on the accretion. So, Mrs. Moti, if she is waiting in the bank, it is called motivating. PJ. Sorry. Correct, no? Yes or no? Moti, waiting in the bank, motivating. Where an asset transferred by spouse is converted to another form, income derived from such converted asset also shall be clubbed. This I can give you an example. I gave you money. Money I didn't put in the bank. I bought some debentures from that. And from debentures I started earning interest. Yes. Allowed. It will be clubbed. Mr. Vyas gives a sum of 50 lakh to Mrs. Vyas on the occasion of wedding anniversary. Mrs. Vyas invests some in a fixed deposit, which derives interest income of 25,000 per month. The income so derived shall be clubbed in the hands of, despite the fact that it is not the It is the income of what? Converted asset. Converted asset allowed. Income of income not allowed. I have made a animation video just like you saw for movie producers, etc. That movie thing. Here also I have made. I have not made for minor and all, that's easy. I have made it for these things. It will help you. I'll play it after that. Don't worry. Yeah. If any individual transfers any asset to any person without or for inadequate consideration for the benefit of deferred benefit of spouse, then income shall be taxable in the hands of the transferor. What is this? What is this? So this is 64:1 7 and 8 for son and son's wife both. Here any person should be read as wife, spouse, son's wife. So make that change addition here. So what used to happen was husband used to create a trust and transfer money into the trust, and trust was paying the money to whom? To the wife or the son's wife. Let's say after investing that money for 15 years. 15 years later, it would go to the, this thing, what do you say, wife. Now, issue went to court because assessing officer clubbed his income. He said, I am not giving to the spouse or, what do you say, somebody else. I am giving it to a trust. Issue went to court. Court said, yes, you're right. So they did not like it. The government, the lawmaker did not like it. That's why he inserted this provision. Now, any individual transfers any asset to any person, that is spouse or, sorry, not this guy, sorry, my bad. It's given here only, no, spouse. Here you write spouse or son's wife, my bad. Spouse or son's wife. This for any person, please write down trust /AOP/BOI. My bad. Here you write down spouse or son's wife. Here any person within bracket trust /AOP BOI. Son's wife, same point is covered here. Son's wife, same point is covered here. Right? If an individual transfers any asset to any person, like for example trust AOP BOI, without or for inadequate consideration, either zero consideration or inadequate, for the benefit of deferred benefit of son's wife, such income from the asset, whatever the trust is investing, whatever income comes, shall be taxable in the hands of the transferor. Very much so. Shall be done so. So direct transfer, indirect transfer is also covered in all these things. So if I transfer to my wife and wife will in turn transfer it to my the daughter-in-law, covered. Or indirect transfers are also covered. Only legal separation between the spouse could avoid clubbing. In case of transfer of property in a very voluntary agreement to live apart, clubbing will apply. So voluntary agreement, they are talking about legal separation. So separation must be legal. Voluntarily, if you say that no, I don't want to, it's a social obligation, I don't want to live with you, different. It should, like they fight, couple fight and the husband runs away, when the wife runs away, then they'll live apart for some time. That is not covered here. Clubbing will still apply. The exemption will not apply. Clubbing will apply. But if it's a legal separation, divorce, then yes. One of my friends went through a bad divorce, I remember. So they lived apart for around 1 year till the case was going on, and then the court granted the divorce. So for that 1 year, will clubbing apply? Yes. After 1 year, once the legal separation is done, clubbing will not apply. Where the wife saves money out of the money provided for household expenses, called pin money, which is called pin money. Yeah, the amount will not be treated as assets transferred by the husband, and clubbing will not apply. Like I remember, my mom is a homemaker. I will never call anybody housewife. Homemaker. Homemaker's job is the most difficult job because it is 24 hours, 7 days a week, no break, no sick leave, no remuneration, no appreciation, nothing, only depreciation. Right? So my dad used to pay some money to my mom, and my mom used to save up something. I still remember, very sweet of her to do it. On his 60th birthday, when he retired from forest service after serving almost 40 plus years. He joined the service at 18. So 42 years of service to the Indian Forest Service, Karnataka Forest Department. My mom gifted my dad out of the pin money that he had. He had given her a nice, what do you say, leather, couch, recliner. So in these movie theaters, PVR and all that, gold class, if you go, that recliner will come, an automatic recliner. So that we got for him. That was purely from the savings that she had made. Now tell me, if the dad keeps on paying some money, is that also clubbing? No, that's what they're trying to tell. Natural love and affection may be good consideration, but not adequate consideration for the purpose of 64(1). So in Indian Contract Act, Section 25, they say agreement without consideration is void ab initio. Any agreement without consideration is void ab initio. But there's an exception in Section 25 of Indian Contract Act. That is written and registered agreement arising out of natural love and affection between the parties. So one of the examples that was, Rajluki versus Bhutnath, one case law is there. CA Foundation, I'm doing a recap. So their husband could not take the torture of the wife. Husband said, hey, please shut your mouth, I'll give you some 20,000 rupees per month. So quarreling, constant quarreling. So the husband started giving money to the wife. If it was not written and registered, then agreement is void. Balfour versus Balfour, if you remember. But if it's written and registered, still is it valid or void? Still it is void. Because here written and registered agreement was there, but it was not arising out of love and affection. General rule, agreement without consideration is void. Exception, written and registered agreement arising out of natural love and affection. So when there is social obligation, Balfour versus Balfour, no contract. Even if there is a written and registered agreement, if there is no natural love and affection, then it will be what? Still it will be void. That is why taking the features of Contract Act in this case law, they are telling that natural love and affection may be good consideration. Because there is an exception under Section 25 of Indian Contract Act. It is not adequate consideration for the purposes of 64(1). Correct? Basically here what happened was, one fellow gave the free asset free of cost to the wife. Assessing officer clubbed the income. He said, no sir, consideration she has given. What consideration? Every morning she gives me food. She takes care of my family. She takes care of me. She takes care of my children. So that's adequate consideration. For that I am giving. Court said, hey, cheating. Because love and affection cannot be measured. Unconditional love and all, you'll tell, no, all that, yes. Unconditional love. See, we can be good with, we can change our accent, change our English as well. With some classy people generally who made, say unconditional love and affection. With normal people, our friends, love, oh, love, you're doing all that. Okay, so keep changing, guys. Come on, we should be like chameleons. Keep changing and mingling with people. Even my T-shirt is like one gift wrapper, correct? No, I'm seeing now in the screen. Looks like some gift wrapper, full shining. Obviously, it has to be the gift wrapper because I am the gift. Yes or no? Yes. I know you're clapping there because of this dialogue. I am the present. So obviously, it should be wrapped by a gift wrapper. Yes, sir, color dress and all you come and wear. Fancy dress competition. Are you a teacher or a fancy dress fellow? Everything. Yes. So, natural love and affection will be good consideration, but not adequate consideration. Throat is full gone, guys. Excuse me. This mic captures everything. So if I'm drinking, the water going inside, everything will come. Yeah. That is what it is. Now, what used to happen? Can I do this? Husband gives a loan. Smart boy. Loan to wife. Wife buys some debentures. Debenture will fetch interest. Interest, can it be clubbed? Please see here. Asset is transferred. Loan is not an asset. Loan is not an asset. Important point here, already given. All these they'll ask in the exam, MCQ. Husband gave a loan to wife at 0% interest. Oh, suddenly inadequate consideration. Gave a loan, irrevocable transfer. Oh, irrevocable 62. Guys, do not go to 61, 62. That is why it says other cases. Other cases, revocable, irrevocable, yes. Here you see, for spouse, I don't care. For spouse and son's wife, I don't care. Specific section will override the general section. So for spouse or son's wife, whether it's revocable, irrevocable, all this should not matter. Specific section will override the general section. What if an NRI gives some shares to the wife? So guys, wife of an NRI, but the company is Infosys. Infosys shares if I give, again, if you go to section 9 of Income Tax Act, any income arising or deemed to accrue or arise in India will be clubbed. So if a non-resident gifts shares of Infosys to wife, since shares of Infosys is from, it's a resident because the office is in India, correct? So it is deemed to accrue or arise in India and hence clubbed. Hence clubbed. So similarly, if you see, I think there was a question also. See this. Mahesh and Madhunika are non-resident living in Amsterdam. They have interest in rental income in India as well as abroad. Minor child Kai is living with grandparents. Okay, this is the children, so we'll see that later. This is for the wife, 64 one. We'll come to 1A and see that later, don't worry. So this is Govindram T. Jarani, case law, New Delhi. Govindram T. Jarani. See all that I've written it down. Analysis. Correct? Govindram T. Jarani. When individual asset transfer an asset without or for inadequate consideration of the son's wife, any income derived from such will be taxable in the hands of the individual. If any individual transfer any asset, this we have told. For the future thing, yes. On the other hand, (64, 1, 4, and 6). Any asset, if I am using it as a capital contribution in a partnership firm, what to do? Asset which is transferred. Like for example, money. Husband gifts money to wife, or wife gives money to husband. Husband uses it as a capital contribution in a partnership firm, or he can invest in business. Money, for example. If it is invested in business, the proportionate income is clubbed. For example, I gave money 2 lakh. You invested 6 lakh, out of which this 2 lakh is also included. Correct? And you derive for the entire income, you will derive some 60,000 rupees income. So what is it? 60,000 rupees income is for full 6 lakhs. So for 2 lakhs, how much is it? 20,000 rupees will be clubbed. Proportionate like that. No, it should be clubbed. But if you put in the capital contribution in a partnership firm, Income derived from the partnership firm. Income derived from the partnership firm, income derived as salary. No clubbing, because guys, salary has got nothing to do with the money that you have pumped in. Income derived as, what do you say, share of profit. Guys, if you know, share of profit is an exempt transfer under 10(2)(a). Anyway, exempt. So it will not come. What is clubbed then? Any interest on capital. We have seen, no, in partnership firm, interest on capital. This only will be clubbed. This only will be clubbed. Hope you got it. That is the part that would be clubbed, nothing else. Same thing given here. Transfer asset by individual to spouse, son's wife without or for inadequate consideration. Yes. Income from the business, my example 60,000 into value of transfer 2 lakh by capital of the business 6 lakh. Mr. Bun, Mr. Hun. See, same thing. Profit is 3 lakh. Profit taxable in Mr. Hun, 3 lakh into 2 lakh by 7 lakh. 85,115. Other one is remaining amount. Clubbing provision shall not apply when the gifted amount is not part of the opening balance of capital, because guys, see here, it says capital of business on the first day of the previous year. Here on 1/4/2021. If she had gifted on 15th April 2021, right? Then this both was on 1st April. That's why I took, overall 7 lakh. If this was gifted on 15th April 2021, and for the year 21-22, this gift of 2 lakh will not be considered. It will be considered for the next year, 22-23 onwards, it will be considered. Hope you understood that. Right? So basically here, very clearly, capital of the business on the first day of the previous year is what you should consider. In my example, Bun and, got the amount on 1st April. Assume she got it on 10th April. When I do the denominator here, generally I take 7 lakhs, right? So here 7 lakhs will not come that year. 7 lakhs will come next year. So keep that in mind. Right? So all these things. HUF also similar thing, cross transfers. And one important, this whatever I've given, no, extremely important. Pointers for MCQs. General law applicable to the clubbing, for clubbing of income. So let us now do for minor child. Okay, minor child will do. Before minor child, I will show you the video for what. I will show you the video, as I told you, to revise till now whatever we have done. Correct? This video is for us to revise. Till now whatever we have done, we will revise.
Hello, my dear friends. As you know, a person is taxed in respect of his own income. But what happens when the taxpayers make an attempt to reduce their tax liability by transferring their assets to their family members like father, mother, brother, sister, wife, etc., such that they can continue to enjoy the benefits? In order to curb these practices, the Income Tax Department introduced the sections 60 to 64, and these provisions are called clubbing of income provisions, which is very, very important for CA Inter and CA Final. Hello, my dear friends. My name is Punurvas Jayakumar, and welcome to my YouTube channel, Punurvas Jayakumar Classes. Today, we will be discussing some interesting aspects in clubbing of income. Before we begin, I request you to please subscribe and hit the bell icon so that you can always be updated about such videos. Let us see some interesting illustrations to understand the concept of clubbing. Let's do it. If a husband transfers his house worth 1 crore to his wife without adequate consideration, let's say for 10,000 rupees, then the income generated from that house, that is the rental income, would be clubbed, that is added to the husband's income. Clubbing would still apply if the asset is given to the daughter-in-law instead of wife. Rental income would be clubbed with the father-in-law's income. If the husband transfers his house to his wife and the wife in turn transfers this house to their daughter-in-law, would clubbing provisions apply? Yes, because section 64 subsection 1 clause 6 covers direct or indirect transfers, and here there was an indirect transfer. However, if the wife buys the home for 1 crore rupees from the husband, there would be no clubbing because this would be adequate consideration. Also, if the husband has given his house as part of divorce proceedings, that is alimony, then there would be no clubbing as well. In order to circumvent these provisions, an individuals used to form a trust in which the beneficiary is the individual's wife or his daughter-in-law. The individual then used to transfer a house valued, say 2 crore, to the trust for just 10,000 rupees. Let's say the house earned an income of 10 lakh rupees every year, which has, as per the trust deed, accumulated for around 15 years, and then the amount of 1.5 crores would be paid to the beneficiary, that is the wife or the daughter-in-law. Would this income be clubbed with the individual? The Supreme Court said that the income was accruing to a trust and not to the wife or the daughter-in-law. In order to nullify this Supreme Court judgment, lawmakers brought in 6417 and 6418 to include association of persons as well. For example, trusts. So, now the income of the trust, that is 10 lakh rupees per annum, will be clubbed in the individual's hands from year number 1 itself. Very nice examples, don't you think? Let us see some more interesting examples, my dear friends. A husband gifts his wife some gold. Wife sells this gold and buys shares of a company. Will the dividend income received on the shares be clubbed with the husband's income? Interesting to note that the clubbing shall continue to apply even if the transferee has converted the transferred assets to some other form. So in this case, the dividend income would be clubbed at the hands of the husband. The husband transfers 2 crore worth of debentures to his wife, which fetches a rate of interest of, let's say, 10%. The wife will earn an interest of 20 lakh rupees. She deposits this 20 lakh rupees and creates a fixed deposit on which she gets an interest of, let's say, 1 lakh rupees. Would this 1 lakh be clubbed in the hands of the husband? It is interesting to understand that the income arising out of income earned on transferred assets will not be clubbed. Therefore, this fixed deposit interest of 1 lakh rupees will not be clubbed. Yes, my dear friends, income on income will not be clubbed. Next example. Husband gives his wife 10,000 shares of X Limited. X Limited issues bonus shares of, let's say, 1,000 to the wife. Now the wife sells these 1,000 bonus shares in the open market. Would the capital gain arising out of sale of bonus shares be clubbed at the hands of the husband? The law says income arising from accretions, that is, additions to the assets transferred, will not be clubbed. Next example. The husband gives an interest-free loan of 1 crore to his wife. The wife deposits this amount as a fixed deposit and earns an interest of 10 lakh rupees per annum. Would this 10 lakh rupees be clubbed in the hands of the husband? It is very interesting to know that loan is not considered as a transfer. Clubbing will apply where assets transferred by the individual to spouse. Assets must be transferred. Giving a loan is not considered to be transfer of assets. But instead of a loan, if the husband had gifted the same amount, then the income of 10 lakh rupees would obviously be clubbed at the hands of the husband. These were just a very few examples, my dear friends. There is still a lot more to learn in the chapter of clubbing. Please support this initiative by liking, subscribing, but more importantly, commenting below if you want part 2 of clubbing chapter. And also let me know what other concepts you want me to handle. Thank you so much, my dear friends, for all your love. Love you all. Punurvas Jayakumar signing off.
Yes, guys, so hope you enjoyed the video. Yes, it took a lot of efforts to do that video. Hope you enjoyed my animated avatar, right? Okay. So, done. Let's see minor child. (64) 1A. In computing the total income of any individual, there shall be included all such income as arises or accrues to his minor child, not being a minor suffering from any disability under ATU. So if you see, this was inserted in 1994 by Mr. Manmohan Singh. Provided that nothing in this subsection shall apply in respect of such income as arising or accrues to the minor on account of any manual work done by him or activity involving application of his skill, talent, or specialized knowledge and experience. So guys, as far as minors are concerned, minors assets or minors income is clubbed in the hands of the parent. Which parent we will see, but under 64 1A. But there are 3 exceptions. Exception number 1, where he does manual work, no clubbing. Child labor, though there is obviously child labor, Prevention of Child Labor Act was there, but now anybody above 14 can definitely work in India. Unfortunately, that's the truth. They work, so you will get that. What do you say? That money that you make will not be clubbed. Then anything activity involving skill, talent, knowledge. Prithvi Shaw at the age of 16 years earned some 1 crore deal when he was picked up by, I think, one of those teams, Mumbai, if I'm not wrong. No, not Mumbai. Mumbai only, right? Yeah. Then he was across various places he went. Then Yashasvi Jaiswal, he's also 16, 17-year-old kid. Like that. Child actors, many child actors you would have seen in many wonderful movies. All these people, if they get money, it will not be clubbed. Third one, Manmohan Singh added that disability clause. If you are disabled, where you are claiming deduction for your child under ATU, as in if your child is disabled, handicapped, so of course, whatever planning you do like this, that is okay. So apart from these 3, in all cases, it will be clubbed. One doubt may arise if you are a minor married child. Again, in India, all this happens, guys. Clubbing will happen under 64(1)(4), which is the spouse, husband's thing, or it will be under 64(1)(A). Again, the specific section should override the general section. Here it's very generic in nature, but this is clearly saying specific. And if you see 64(1)(4), it doesn't say spouse who is major and all that. That you have to clearly see here. Spouse of such individual who is a major, nothing they say. So everything will come into the picture. For the purpose of this subsection, where the marriage of the parent subsists in the income of that parent whose total income is greater. So if the parents are married, then where will it be clubbed? In the hands of the mom or dad, whosoever total income is, excluding this income, whosoever total income is higher. or where the marriage is not happening, does not subsist, if the income of that parent who maintains the minor child in the previous year. Maintains the minor child in the previous year. Basically here it means that who has custody, who has primary custody. There will be joint custody also, but primary custody also. Who has primary custody? So that's custody that will come here. Whoever has custody, that parent, it will be clubbed in their hands. Where any such one included, of course, once included in one parent will not be included in any other parent as such. If both the parents are dead, then it's a different thing. We'll have to see what to do. So will it be included in the legal guardian? Correct. So income of the minor child, what do you think? Will there be clubbing when both parents are dead? No, because it's here clearly sees here where the marriage of his parents subsists or marriage does not subsist. Talking about marriage, what if their life only is no longer there? If they're dead, then obviously it will not be clubbed. So minor will have to file income tax through her guardian. Once clubbing of minor's income is done, same thing. Child includes obviously stepchild and adopted child of that individual, but does not include illegitimate child. Stepchild is there definitely. So basically if a person gets married to one more lady who's already married with children, who was married before, divorced with children, then of course yes, stepchild or adopted child. Legally if you have adopted some child, that child also will come. Illegitimate child, so anything born out of wedlock will not be covered under that, you need to remember. So when any income of the minor is clubbed with that of the parent, exemption of 1,500 rupees per annum, Chapadasi exemption, or income clubbed per minor child, whichever is less, shall be taxable. Useless shall be available to the parent, not taxable, shall be available to the parent. 1032. Income of to a minor by way of winning from lottery. So exemption at section 1032 cannot be availed by the parent if the minor wins some lottery. Income of minor married daughter would be clubbed in the hands of either parent, one part, or you can write husband. Many courts have held husband also. Correct, because it is specific section overriding the general section. Minor unmarried, that's okay. Minor married, it is specific section override under section. There are many areas where this is also covered, many areas is also covered. In the exam, you can write either. In the MCQ, generally stick to the husband thing only. Clubbing shall not apply when disability, all these three things you have already done. Any investment made out of the income of the minor which cannot be clubbed with that of the parent. So if that income, whatever the minor earns, if it is, invested somewhere and that interest is earned, yes. Interest income earned on such investment will be clubbed with that of the parents. That is one part of the story. Other part, let's see. What is the other part? Investment will not be clubbed, but the income on investment will be clubbed. So in this particular case, in these three cases, especially let's say your Prithvi Shaw's dad, Prithvi Shaw earned 1 crore rupees. Prithvi Shaw invested that 1 crore in an FD. Will that be clubbed in the father's hands? No. But the income from that, see, interest income earned on such investment will be clubbed with that of the parents. So yes, investment will not be clubbed. The fact that you invested, that will not be clubbed, but the interest will be clubbed. That you need to keep that in mind. 11th one is a normal point. 12th one also I have seen, I have told you already. Disabled, no clubbing. Interest, dividend, rent from investments, clubbed in the hands of the parent. Manual work, taxable in the hands of the minor child alone, no clubbing. Income derived by minor from the activity involving application of skill, etc. Taxable in the hands of the minor child alone, no clubbing. But interest on FD derived by minor child when money received by such minor child is from manual work or application of skill, interest on FD. That is clubbed in the hands of the parent. Prithvi Shaw receiving 1 crore, that is not clubbed. But when Prithvi Shaw puts it in a FD and gets interest, that will be clubbed. Similarly, where a trust is created for the benefit of the minor child without any rights attached to enjoy such benefits, but deferred to a date after he attains majority, income could not be clubbed till he attains majority. So income will not be clubbed if there is any trust. From the 19th year onwards, obviously, or 18th year onwards, it will become his property only anyway. Income of minor child of a non-resident cannot be clubbed if such income accrues or arises outside India. Such income is taxable in the hand of the minor child if he is a resident only. Section 5 cannot override 64. Based on that only one question had come. See. Mahesh and Madhunika are non-resident living in Amsterdam. They have interest and rental income in India as well as abroad. Minor child Kai is living is with grandparents in Delhi and is resident of India. Kai earned interest income from fixed deposits held in banks and companies both in Amsterdam and India. Mahesh and Madhulika filed returns disclosing their Indian income and interest income of minor child earned in India clubbed. Separate return was also done as guardian. AO wants to club everything. Section 5 restricts scope of income only to income received, accrued or deemed to accrue or arise in India. 64(1)(a) envisages to club the income of minor child in the hands of the parents. Any income of resident minor child earned in India alone shall be clubbed. Any income of resident accruing outside India cannot be clubbed. Hence, bank interest from Amsterdam, etc. cannot be clubbed in the hands of his father as he is a non-resident. So, where a member of the HUF has transferred an asset with or for inadequate consideration to HUF, income arising from such asset is taxable as the transferor member. So, this was a tax evasion tool for tax evasion, whereby a member used to create a HUF and HUF used to invest. So, earn income. So, that also is clubbed in the hands of this. All that I have given here, very interesting. We will see that in a while. General notes and other things. Especially this one. General law applicable to clubbing of income. Study that and go. For clubbing, it is not essential that the assessee's own income, excluding income to be clubbed, must exceed the taxable limit. There's nothing like that. No, nothing. It says that excluding the clubbed income, it should exceed the taxable limit. Nothing like that. Everything will be clubbed. Husband or wife have equal income or no income apart from what needs to be clubbed, and it cannot be established whose income is greater. Clubbing fails, and income shall be assessed in the hand of the minor. Deadly. Basically, parents have no income. This fellow has income. Clubbed. Then under whose name? Nobody's name. So it will be clubbed in the minor's name. Minor child's income from agriculture will be included in the hands of the parent with a higher income for the purpose of aggregation, even though such agricultural income is exempt under 1011. Where a member of the HF has transferred with or without, yes. The transfer asset is subsequently partitioned. So if partitioning happens, where I will transfer an asset to a Hindu undivided family, then no, then normally if it is income arising from the asset is clubbed there. So when it's transferred till the date of the actual participant. So let us say Mr. A puts this property in the HUF on 1/1/2022 till 30th/6/2022. On 30th/6/2022, it is partitioned and it is divided 20% each. 20% to wife, 20% to minor son, minor daughter, major son, major daughter. Now tell me, guys. From the date he transferred till the date of partition, it is clubbed in A's name only. Correct? It's a 10% to the wife and 10% to A also it will go, no? Now, after the partition happens, the income etc. will go where? Partition happens, but it continues. The investment continues, interest will keep getting. So 10% will be taxed in A's hand only. whatever has gone to the wife will be taxed in A's hand only. Minor son, minor daughter, tax in A's hand. Only these two things, major son, major daughter, that will not be taxed. In A's name, it will be taxed in their individual names. That is what this says. Clubbing provision shall be applied only when there is a transaction of gift. In case money is lent to another person, loan already, which creates lender-borrower relationship, it is not a transfer, already discussed. If the asset is sold by the transferee, then the capital gain also shall be clubbed. No mercy. We have seen that in the whatever we had shown. Income from for clubbing purpose also includes loss. Yes, you can club the loss also, and you can also, when you club the loss, it will be benefit for the person, right? It's good. Benefit is also allowed. Income is a subject matter of clubbing shall be first computed in the hands of the transferee under the appropriate head with all permissible exemption, deduction, etc. Net income only will be clubbed. So when I transfer house property, etc., that fellow will transfer, I mean, not to the spouse, let's say to the son's wife. Then the son's wife will, subtract all those municipal tax, etc., everything, and whatever remains, only that will be clubbed. Who in turn sells it for capital gain. Capital gain would be first be computed in her hands with all relevant exemptions and deductions like 54, 54 EC, and then net taxable capital gains only shall be clubbed. Cross transfer. Two transactions are interconnected. Mr. A sells it to Mrs. B. Mrs. B and Mr. B gives it to Mrs. A. Full cross connection. Then Mrs. A transfers to the like this cross transfers. That also will be clubbed. Device for evasion of tax, clubbing provision shall be invoked. Shahrukh gives a sum of 10 lakhs to Mrs. Karina, who is the wife of Mr. Saif Ali Khan. Here you see. Shahrukh, Saif Ali Khan. Shahrukh gives a gift of 10 lakhs to Karina. Saif Ali Khan gives a gift of 5 lakhs to Gauri. So this gift will be in the hands of Shahrukh Khan. This gift in the hands of Saif Ali Khan. Nothing can be done. Keshav Morarji, case law, Supreme Court. Income from gift received from Mrs. Karina will be clubbed in the hands of Saif Ali Khan. Cross transfers. In case of clubbing, person in whose name the asset stands shall be liable on the service of notice of demand by the AO. So yes, AO will send a notice of demand at 156. It will be clubbed. Who will be given to? Whose name the asset stands. Name matters. So general law. For the chapter of clubbing, the clubbing shall continue to apply even if the transferee has converted the transfer to some other form. House property is transferred to son's wife and she sells the house property and buys debentures. Income from debentures also will be clubbed. We have seen. Chapter of clubbing, income shall include loss also. Loss is also to be clubbed. If the transferee sells the transferred asset, capital gains also shall be clubbed. We have seen. Income arising out of income will not be clubbed. We have seen that already. Clubbed income shall be retained under the same head. Therefore, business income of a minor child shall be clubbed in the hands of parent under the head PGBP. Deductions available under 5 heads of income shall be allowed, and income after such deduction only shall be clubbed. Interest-free loan, as discussed, loan is not transfer. But if gift is given, then clubbing shall apply. Cross transfer, just a revision tool. Revision. HUF is a partner in a firm ABC through its Karta, Mr. X, and has 25% share in the profits of the firm. Wife of Mr. X wife of Mr. X is employed by firm ABC. It's there corrected in your thing, don't worry. In this case, clubbing shall not apply because Mr. X is a partner in the representing and not in the individual capacity. So here, HUF is the partner of the firm ABC. How will HUF be? Only through the Karta, right? Mr. X. And it has HUF has 25% share in the profit of the firm. Wife of Mr. X is employed by the firm ABC. And wife is being paid salary. Will clubbing apply? No. Because X is a partner not in his individual capacity but in the representative capacity. So kindly see this very interesting word here in 64.1. In computing the total income of any individual. Doesn't say HUF. Page F1. It says individual, right? So only individuals thing should come there. Hope you got the point. If a trust is created for the benefit of a minor child, then the income of the trust shall be clubbed with the income of the parent under 64.1a. This shall apply even if the trust deed provided the income shall be accumulated by a trust and shall be given to a minor child when he attains majority. Clubbing provision under 64.1a shall apply since the income accrues for the benefit of the minor child, although it may be given on attaining majority. So this 10th point is what is followed in ICAI. This is an exception to this particular law. After that, many cases came. This first one. Correct? So this you can ignore if you want, because it was nullified by this. This is what you need to follow. ICI. Okay. So if a trust you create also, it will be clubbed. Then deemed owner, we saw deemed owner will just quickly, it's house property, deemed owner. One is this one, deemed owner. Holder of an impartible estate shall be deemed to be the individual owner of all the properties. So earlier, no, for all the, what do you say, people who were going and telling the secrets to the British were giving property as rewards. So that reward is called as an impartible estate. And that will be deemed to be the holder of the impartible estate. That is passed down to various generations. Whoever is holding that estate, though it doesn't belong to him, but it belongs to his parents, father, whatever it is, that person is also deemed to be the owner, just to make it absolutely clear. Similarly, in these homes, etc., if you are registered as a cooperative society, the cooperative society holds the all the houses there in the apartment, and shares will be given to the owners in the cooperative society. The building, etc., the land and building will be owned by the cooperative society, and the owner of that particular flat will be given shares. So is he the owner of the shares or owner of the flat? Obviously, deemed to be owner of the flat is what this point number 3 says. Then other thing you leave, it's fine. These 3 things are enough for us to understand. One more thing, guys, just we can, for your knowledge, we'll just do that also. Section 65, once that asked in MCQ, I'll just cover that. You can make a note somewhere. Where by reason of provisions of 27.1, income of any asset or from membership in the firm is included in total income of the SSC, person in whose name such asset stands or a member of the firm will be what? Will be attributable. Where it is held jointly and severally payable. It's there in the notes here. In whose name the asset stands shall be liable on the service of a notice. Means what? Person in whose name the asset stands shall be liable, which means if my property is there and I have given it to my wife, whose name is the property in now? It's in the name of my wife. And let us say there is a tax demand on me and I am unable to pay. Then this section says assessing officer can ask the wife also to pay. Assessing officer can ask the wife to pay. So for example, if my total income is 30 lakhs after clubbing, of which I have to pay, let's say 3 lakh amount. And in that 30 lakh, 10 lakh is the one that is clubbed. So proportionately, 3 lakh into 10 by 30. That is 1 lakh can be recovered from my wife. That is what this actually means. Section 65. So that, my dear buddies, completes clubbing of income, easy provisions. Please go through all the questions and solve. Okay. Very much in depth we have done. Beyond this, not needed. Everything we have covered. Okay. Ciao.